The fight over artificial intelligence is officially on. Google and Microsoft are duking it out over who is going to be the master when it comes to artificial intelligence. Now, this comes at an interesting time because if we look at search engines, Google has clearly been the master over Bing. Nobody likes searching things on Bing. Why would you do that when you can go and Google it? Well, now it looks like Microsoft has a new trick up its sleeve with its artificial intelligence. Now, Microsoft is one of the largest investors in OpenAI, which is the company that created ChatGPT. Now, ChatGPT is that platform where you can go and ask a question and then it will use artificial intelligence to then give you an answer. Now, the interesting thing about ChatGPT was it was the fastest platform on the internet to gain 1 million users, and it was also the fastest platform on the internet to grow to 100 million users. So ChatGPT has been growing very quickly. Google clearly saw this, and then Google just announced their own competitor to ChatGPT called Bard. Now, Bard is not available to the public the way that ChatGPT is. Bard is only available to some trusted advisors at Google. And then what was interesting is Google started promoting their new Bard platform on social media with a GIF showing how you could ask Bard questions and it would give you answers. But what was interesting and that caused a lot of uproar on social media was that Google actually had false information in their social media advertisement, which many people were saying that you could have just fact-checked the information right on Bard to see if it was actually asking you the right information, and that was what caused a lot of huge kind of controversy on social media. Now, on a more investor level, a lot of investors haven't been happy with Google's new announcement of Bard. That's why we saw the Google stock price get hit pretty hard as soon as they announced their new artificial intelligence, and the Google stock valuation dropped by over $100 billion when they did that. Now, who's going to win? Well, only time will tell. But what's interesting is Microsoft also recently announced that they launched a new feature on Bing, their search platform, which will allow you to ask questions and get an answer through artificial intelligence. Meaning you won't have to go to something like ChatGPT to get an artificial intelligence answer. You can just go directly to Bing and now ask a question, and then you can either find search results or you can get the actual artificial intelligence answer so they can actually give you an answer. Now, this isn't fully rolled out yet. They're kind of going through their own beta where you have to apply to try it, but it's an interesting tool which could give Bing an edge over Google, which would completely shift the way that you search things on the internet, because right now nobody really wants to go to Bing to search anything. They want to go to Google to search things. But if Microsoft can be the leader in artificial intelligence, well, that could completely flip things up. But Google is saying, hold your horses. We're investing very heavily into artificial intelligence as well. We have our own platforms up our sleeves. So this is going to be an interesting investment. And what we've been seeing is a lot of people are putting a lot of money into artificial intelligence. And this is where now I want you as an investor to be a smart investor and understand kind of what's happening by looking at what has happened in the past. Now, we've been covering all of this in Market Briefs, which is my free financial newsletter. If you haven't joined Market Briefs, it's an easy way for you to stay up to date on what's happening in things like the housing market, the stock market, artificial intelligence, the economy, crypto, and the global economy. We break it down into a fun, witty, and easy to read email. And so if you haven't joined Market Briefs yet, I'll put the link to how you can join for free down in the description below. Now, what has happened in the past, whether it's cryptocurrency, whether it's .com companies, anytime you see a new technology and it becomes a new revolutionary technology, people get very excited. And then they start pouring money in. And then you see the valuations of some of these investments start to grow, which then bring in the, let's call it dumb money. People who now don't really know what the technology is, don't really know what they're investing in, but they like the idea of trying to be on the cutting edge of technology, and now they're chasing the best investments. And then you see an even bigger wave of money coming in, and now this causes the valuations of some of these investments to go way higher than what it should be, and then this creates a bubble. And then eventually the bubble bursts, and then people say the artificial intelligence is just a fad, it will never last, it was just a little thing, and then people lose money, and then you start to see the rise of real strong artificial intelligence companies and startups. And so we've seen the same trend through many different industries, whether it's blockchain, whether it's .com companies. You see the same trend every time you see a revolutionary shift in technology. So what does this mean for you? Well, if you are an investor in artificial intelligence, just understand that if it's being covered on the news, well, that rally is probably already done. Now, you don't want to chase a company, but understand that if you are going to invest in anything, whether it's artificial intelligence or any technology or any company, that you want to make sure that if you're an investor, you are investing for the long term and not being a trader, because traders and investors have two completely different types of analysis. And as an investor, you want to be investing for the long term and understand that, hey, when you invest in a new technology or something like this, it can be very volatile. Volatile meaning it can go up very quickly and go down very quickly. And this is where you want to make sure you have your strategies in place, know what are your sell parameters, why would you sell, and if you do see a downward swing, that you don't panic, because now you want to be a financially educated, savvy investor and understand what's happening, instead of being one of the people that's just emotionally chasing the stock up and then selling it because you're panicking and worried about losing on the way down. So understand that now we are starting to see more and more money start to come into artificial intelligence. I don't think that trend is going to slow down. I think we're going to see more money come into artificial intelligence as Google's new artificial intelligence platforms start to get more press, that they get more coverage, as they start to get more usage, as we start to see more and more companies launch their own versions of artificial intelligence. It is going to bring much more attention to artificial intelligence. It'll bring much more interest to artificial intelligence, and that's when you're going to see a big boom happen. And then again, as an investor, understanding how people's emotions work when it comes to investing as well. Now, the next concern is, well, how is this going to affect layoffs? How is this going to affect people's jobs? How is this going to affect the economy? Well, for one, the whole idea with artificial intelligence is to increase efficiency. Because now with artificial intelligence, instead of having to go and research and read a bunch of articles on how to do something, artificial intelligence can just break it down for you. It'll tell you the answer. Now, is it 100% right all the time? No, there's still a lot of work to do with artificial intelligence. It doesn't have the same common sense that humans have yet. But this is where understanding that the goal with artificial intelligence is to increase efficiency. When you have more efficiency in a company, you can typically get rid of employees. We've been seeing some companies announce that they're going to start implementing more artificial intelligence to increase efficiency and then announce layoffs. One big example of this is BuzzFeed. BuzzFeed announced that they're going to start using artificial intelligence to start creating some of their content, and then around that same time they announced that they're going to do a big round of layoffs because they want to increase efficiency, lower some of their costs, and then use artificial intelligence tools like that to then write some of their content. Now we're also seeing more investments into different industries, like Microsoft announced that they are working to create an artificial intelligence tool to write sales emails particularly. So now if we have a sales team in a company, they're working to build a tool that can respond better than a salesperson can, that can answer more needs of the clients. Now, how good will it be? Well, that's where time will tell. But the whole idea here is to increase efficiency, and this is where many people are saying, this is not good, it's going to take away many jobs. Well, what you see happen anytime you see a shift in technology, because we did the same thing when the internet revolution was happening. You saw people moving away from brick and mortar stores, going online, and then everybody was saying, well, what's going to happen to all these retail clerks? They're not going to have jobs anymore. They're not going to know how to operate online stores. They're not going to have anything to do. That's going to cause a lot of problems in the economy. And when you go through shifts, you see a new wave of jobs open, and some types of jobs will become less needed. Like retail clerks became less needed, and people who manage online stores became more in demand. People who can manage and build online websites became more in demand. Now, does that mean that those skills will directly transfer? No. Does that mean that one job will be created for every job lost? No, not necessarily. But our economy will always go through phases. Now, obviously, it's much faster because technology is growing much quicker. Back in the day, there used to be a job for somebody to wipe windshield wipers. When you go to the gas station, somebody would be doing your windshield wiper wiping and washing your car. Now that doesn't exist anymore. Things change with time. And understanding that as things change, the economy will change and jobs will change. So what does this mean for you? Well, for one, understand that this shift is going to happen. We're going to see it happen. We're going to see a big boom. We're probably going to see a bubble form. We're going to see a bust, but then we'll see the stronger artificial intelligence companies stay alive and thrive. But then also being on the cutting edge and understand that sometimes you can't fight technology, and you have to learn how to embrace it and use it. That way you can stay on the cusp of things instead of being the person that's just trying to follow the trend after it's already happened.